Hello everyone. So today I will give you examples with real volume and not only tick volume. But this time we won't need seasonality to determine our bias, but instead we will define our levels and then we can use footprint to confirm rejections and breakouts. So we clearly can have more chances throughout the day or intraday trading or scalping sometimes. And this is why we won't need the general bias using seasonality. So this is if you have those tools available, which most people won't, but if there is or so much people request it, then I will give you the correct version and I will show you how to get unlimited uh, data or futures data so you can practice more without paying anything. Exactly, anything. So the first thing we can clearly see is this huge volume cluster, and as I showed you before, the heavy on or the heavy spot on high volume node, which is a point of control, but this is on this case, this is not the main point of control, but it's the point of control of this cluster. So this is where price accumulates because there is so much liquidity, so institutions can build their positions without worrying of price or huge price changes. Of course, if we can come back over here, we can clearly see this is the area where the point of control is, and you can see that there is consolidations at this level. And if when there is low volume nodes over here, then those are the areas where we have the best support and resistance areas. So we can clearly wait for price to come over here and we can confirm if there is an absorption selling activity with the footprint, and then we can short. But if there is so much aggressivity from buyers, then we will wait for price to break through, and then we will wait for retest and then confirm. If there is still a bullish strength, then we can go long, because if there is no bullish strength in the footprint, we won't go long. So we will mark our levels. So the first level is over here. We can clearly see that the price is reacting to those or to this level. So this is the first level. So anytime the price come back to here, I can wait for a confirmation for my footprint. So if there is an absorption, I will go long. If there is a strong bearish move, then I will wait for breakout and retest. And the second level is over here. So if price come over here, I will do the same with the footprint. So footprint is, so this is the cumulative delta, which shows me if there is, let's say, a consolidation or a weak trend, I will know where the institutions are building their positions. So if there is a weak bullish trend and then in cumulative delta it's going down, then I know institutions are willing to flip the price down. And this is a volume profile. This is a session volume profile actually, and this is the VWAP. Of course, I'm not going to explain everything. This needs hours and hours of explanations, and I won't make it in a single video. I'll just show you the last strategy. So another levels are over here. So this is, there is two levels, of course, level 1, and there is another level in here. There is, okay, I'm just, okay, so there is another low volume nodes over here. So can clearly see in price action that this level is very important. So it starts from here and it clearly ends slightly a little bit down. So you can see that price reacting to it very well. And if I come back down, okay, I won't need to mark those levels, but you can see that there is this important level in here and there is another level in here, using price action, using your eyes, of course. So how can price move? Basically, there is the important places and the non-important places. So the most important places are around the heavy volume node. So we have this one, and I select many of them because I don't really like this platform. I usually use trading view because I left scalping with futures just because it doesn't suit my mindset, and I'll be completely okay using tick volume profile with some very low percentage of errors. Let's say I'm gonna have my stop 50 pips slightly higher or more. Yeah, this will give me less accurate increase and less rewards, but watching the chart, watching every candle forming, every footprint, this is just so much. It's not for me. And I'm just giving you an example with the real chart and real volume, as you can see over here. So there is an important levels and non-important levels. So I clearly hate this Ninja Trader. Trading view is much better, but okay, I will change it manually, and this is the red spot. So every time price come here, I can go long, go short, and this is the green spot currently. So those are the most important levels now because price is going in, and the second important places are this one and this one because they are around the heavy volume node. So we can, if I come back here, it's this level and this level, and no matter the other levels. So when price is going in here, then those levels become the most two important levels of the wall chart, and I can wait for a breakout or can show to the point of control, or basically the middle of, mostly the middle, but in here we have real volume, so it will be this spot. So it will be so much better if I long from here because I'll have more distance, so more profits basically. So we're not in the cash session, we're in London session. So you can clearly see that there is not much volume. It's 260 per 5-minute candles. I think sometimes it goes to 20,000, 10,000, even sometimes 30,000 in the cash session or the New York session after, let's say, 4 hours from now. But anyway, who cares? So how I can check if there is a confirmation of footprint? So basically the first thing you need to do is to understand footprint. I'm not going to show you how or the real basics of market structure and the footprint. So it's basically showing the people are buying from here and the people are selling. We have the volume here, which is if let's say volume is equal to 1 transaction. So we have the delta bar, which means buyers minus sellers, and it's 47, and this is the delta percentage. So the percent 34 is about 9% from the total volume, and we have the cumulative delta, which means we're going down, as we can clearly see over here. And we have the minimum delta, which means what's the lowest delta reached for this bar or for this 5-minute candles, and what's the maximum delta. And the minimum and maximum delta are the most important, let's say, things I focus on my table. So it's even more important than a stack of imbalances. So an imbalance is basically, or most of the times, you can use your settings. So if you find it green or blue over here, it means if we compare it to this level, then it will be more than 3 times. So basically, why we compare like this and not horizontally, it's like diagonally. Why? Because if buyers want to buy, then they will push the price up, and if sellers want to sell, then they will push the price down. So we end up on those 2 levels. So this is why we compare it diagonally. And this is, you can say, this is a random video. And of course we have the VWAP, which calculates the mean, and we have 1 standard deviation, which means those bands where 68% of data falls from the beginning of the session. The VWAP is very sensitive to sessions, so you can use it, let's say, from the beginning of the trend or beginning of the session. And I hope it reaches this spot after minutes, so I can really show you a real example. This video will be slightly long than I expected, but I think it will be useful with some random informations, I guess. So if I come back over here, what I'm going to show you. Okay, this is, what the hell is this? I think we need to extend it a little bit so I can explain better without any. Okay, so let's talk in here. So in the footprint, there is something called absorption. Let's say there is an indication that, for example, this one shows a very strong buying activity, 28, which is so much. 28 for the buyers is crazy. But imagine you have the same table, but price is not moving up. What does this mean? This means sellers are selling too much contracts than the buyers can, so the price is not moving up, while the buyers are trying to buy everything the sellers are trying to offer. So this is an absorption, and it usually happens on those levels. If I can see a huge bullish activity at this level, but the price is not moving up, then I know this is an absorption, and I need to go short till the next confirmation. Of course, I won't. It's better to wait for retest, but most of the time those levels there is no retest. Anyway, a retest is better, so you're not entering trade is better than entering one and then losing. So 0 is better than losing, of course. So this is the idea of an absorption. And the second idea is the minimum and the maximum delta. So the first thing, for confirmation, we need to see at least 5 to 8% on the delta bar, or the delta percentage. So in here, like in here, it's -9. Of course, you can't apply to here because those are small institutions or big institutions building their positions with like spoofing techniques, or not spoofing but icebergs, and you can't really use it. You can use it only when there is high volatility. So when market is really moving or really willing to move and not just consolidate. And this is most of the time happen in the cash sessions. So at least 5 to 10% or 8, let's say, at the minimum on the delta percentage. And what I need to see, if there is a bearish activity like this, then I need to see the, where is the delta? I need to see the delta bar, which is minus 44 over here, closer to the minimum delta. So the delta is closer to the minimum delta, which means sellers are in control. So let's say over here the delta is minus 44 and the max or the minimum delta is minus 45. This is like 97. So sellers are very strong in here and the price will come down. So especially when there is a resistance over here, and if we face an absorption, god damn, this is an A+++ setup. So in bullish situations like this one, we're going to see, of course, we confirm with the delta. Of course, use what I'm telling you with footprint only when price reaches those levels. So you can have a very strong move. So because price is reacting to those levels very heavy. And let me just come back to the 5 minute. So this is for confirmation, and for charting I use 30 minutes. Not because I hate the 15 or the 1 hour chart, but because the cash session starts on 2:30. So on 2:30 p.m. in my let's say region, and if I use the 50 minutes, the charts will be full of candles. But if I use the 1 hour chart, then I won't have those 2:30 candles. So this is why, if let's say if the cash session starts on 3 p.m, then I will be okay using 1 hour chart. It will even help me, so I will have less candles, so less distractions for me. But let's come back to our topic. So what do you need to see is at least 5 minute or 5% on the delta percentage, and on the delta bar I need to be closer to the maximum delta, and the delta bar close to 205, and the maximum reached is 240. So if I just divide it, we can clearly see it's 6 or 96% of the maximum delta. This is insane. This is a bullish driven move, and we can clearly see that it's going up. And for another confirmation, we have a stack of imbalances over here. You can see this imbalance 1, 2, 3, 4, and etc. So, and of course, if we come back to the cumulative delta, it's also going up. So delta is building up, and this is very insane. There is let's say an external information. You can use market structure or normal market structure in cumulative delta, so we can clearly see it's building up. So if there is a rejection at this level, then we can clearly see that the amount or the institution driven the price here is willing to short from here. So price is not always let's say the thing that reacts to market structure. And I'm just waiting for price to come back over here. I think it will take so much time, and the video is already 20 minutes. And this was just a random video. If some people, let's say at least 10 people, tell me to explain how you can trade those levels with footprint, so you have a higher win rate. Let's say if you use this, you can get at least 50% to 60% win rate. This is just insane. And of course, we're not using 1 or 2 risk reward ratio. We mostly use more than 2 risk reward ratio. This is just insane because we'll have a huge profit factor. But I told you it's not for me because I can't just stay on like 3 hours watching every candle forms, and not just every candle. I'm watching the footprint. I'm watching every contracts being executed. This is just insane, and I can't just do this. I like to do my analysis, put my limit, and then go sleep or play games or something like this. But if many people ask me to, and I'll explain it in a better way than this random video, of course. And thank you.